Okay, well, let's get started, everyone. Thanks for joining us for our Quaranteam Finance Chat. Today's a lovely Tuesday, and we're still in a COVID crisis. So nice to be chatting with everyone, and thanks for everyone for joining. We've got a few panelists, which I'll introduce you to in just a second. But thank you all for joining as well. We're all in this together, so your participation is appreciated. And a special shout out to everyone who's joining us on Facebook Live. Thanks for tuning in. It's not too late to join us on the Zoom link. And if you're having trouble finding that, the easiest place to go is the front page of our website, entreflow.com. And there's a link right there to a page with all the joining instructions. And we'd be glad to have you on and have your questions on the call as well. So today we're going to run through our usual agenda, which is to go through the latest updates in the COVID response business news, run through a few top tips, and then we're going to focus today on raising equity and debt in these kind of times. And we're definitely going to have a lot of time for questions and answers. So I'm Iain Rogers. I'm the founder of Entreflow Consulting Group. Many of you will have met me before. And joining me right next to me, Helina Patience, my co-founder partner in business and life. And we've got some special guests with us today. So joining us again from Startup Canada, the Startup Vancouver chapter, is Colin Weston. We've got Kern Chiu from Ashdown Capital. And I'm sorry, I meant to write your name properly, Paul Brassard. That was a copy-paste error. Sorry, Paul. Who's the managing partner and lead advisor with Volition. So before we continue, why don't I give you guys an opportunity to introduce yourselves properly. Paul, do you want to go first?
Sure. Today, I guess I'm Colin Weston. So very quickly, as Iain alluded to, I am managing partner, lead advisor, and one of the co-founders of Volition. Volition is a advisory and events firm for startups and entrepreneurs based here in Vancouver, but we're also now virtually global, I guess I should say. Prior to the COVID crisis, we had expanded to Calgary, Seattle, Amsterdam, Madrid, Lisbon, and Dublin. And we just recently soft launched in Zurich. So we're very proud and excited to be able to help entrepreneurs everywhere. How we do that is through our different types of content to help empower entrepreneurs and startups on their journey towards success through things like masterclasses, Ask Me Anythings, and a lot of people know us through our advisory services, as well as our banner pitch nights, in which we hold on a consistent basis, and usually see about 100 people per pitch event. And people come out and pitch, get feedback, and improve, and get fee. It's an awesome experience, and we get to help a lot of people.
Thank you, Paul. Kern, can you say a few words to let everyone know who you are?
Yeah, no problem. My name is Kern, and I'm a member of our group called Ashdown Capital. Who we are is we're a bunch of ex-commercial bankers. I was previously 16 years with a major financial institution with HSBC, leading one of the commercial teams in the Fraser Valley in the commercial credit space. I also spent 5 years in the bank dealing with the insolvency group. So it's the workout collections, probably a department that's going to get very busy in all the big 5 banks after this COVID crisis. And since then, I've left banking, went into a private business, and did a succession play, which didn't transpire. And since we've created Ashdown Capital, which essentially what we felt is that there's a bunch of entrepreneurs that don't know how to find financing for their business, or don't understand the way the banks work to get financing. And essentially what we've done is we've jumped across the table as bankers to be partners with the entrepreneurs to help them with financing. So that's kind of what we've been doing for the last 2.5 years. We simply arrange loans from a senior debt to a mezz to a angel investor to growth capital. And to date, we've helped clients raise about $500 million in financing. So that's who we are.
Okay.
Sounds good. Thank you. And Colin, can you introduce yourself?
Absolutely. My name is Paul Brassard. No, my name is Colin Weston. And
never going to live this one down.
I am an entrepreneur and a podcaster, amongst other things. But the reason that I'm with you today, of course, the hat that I wear, one of them is, of course, as the co-founder and community leader of Startup Vancouver. And Startup Vancouver is one of over 50 chapters across the country of Startup Canada, which is the voice for the over 3.5 million entrepreneurs across the country. And we do that through events in person in real life, which of course are on hold right now. But the other strength we have and have had for over 10 years with Startup Canada is delivering content through digital platforms, which of course we are ramping up right now. Our why with Startup Vancouver is being that hub and that connective tissue that brings together the community and connects them as entrepreneurs to be as successful as they possibly can be by giving them the tools and resources that are out there, including the great things you're doing here with EntreFlow. Of course, with Paul and Volition, we've partnered with them with Pitch Night and other things over the years. And we continue to do that. And we're going to be ramping that up even more over the next month or so, once we get our feet on the ground here with Startup Vancouver with a digital platform. So lots to come, lots of collaborations. Kern, I'd love to talk to you also, because that's part of what we do. We connect people together. We're pretty darn good at it. So once again, happy to be here, happy to promote what you're doing and contribute in any small way that I can.
Thank you very much. We're very appreciative to have all of you on our panel today. We're going to introduce ourselves properly. So EntreFlow is a consulting firm. We're a boutique firm. We're 18 people, and we're accountants and CFOs. We're HR consultants, and I wear the marketing hat because that's my background. So I help out our clients with that. And we're working with companies that have a little bit of traction and need to put in some structures, some systems, some processes and analysis in order to fuel that next stage of growth. That's where we live, that's where we love, and so this is what we do. I'm happy to take any questions about these kind of services as well, but today is more about what's going on in the world and what we should do about it. So the news. Here's the latest news. Is a big slide of text, so I'll try to go through it as quickly as we can. Some of these are no update since last time, but we're leaving them on there for completeness. The only real news is that the bill has passed for the wage subsidy for business, known as the 75%. The update on that is that the Ministry of Finance and the Minister of Employment are now giving estimates on when those funds might actually start flowing. So to review this quickly, this is for Canadian-controlled private corporations, registered charities, and nonprofits, small businesses, and they define that based on an amount of capital deployed. And there must have been some kind of decrease in business as related to the COVID crisis to be eligible for this. The recent change from last week was that it had been compared to the same month last year, but now they're allowing you to say, well, what was the average of your revenues in January and February? And then you can demonstrate that there's been a 15% decrease in that revenue in March. So that's, and then that will qualify you for a 75% wage subsidy. So it seems like the idea is that monies will flow to the business directly into your bank account, and you can access this program through the CRA My Business account. Yeah. The portal's not ready. And those ministers that I mentioned are now saying that it will be 2 to 4 weeks and from now until funds start flowing into business owners' accounts. They'll do it faster if they can, but that looks like May 9th should be the latest date based on that estimate that business owners can expect those monies.
And just to clarify, I think that the Jan and Feb numbers, rather than the March year over year, is only for the month of March. For April, it has to be year over year for April and May, I think, at this point. And I think they still want a 30% decrease for April and May. I'm not sure if that was clarified in the bill that was passed. Did you see that?
Maybe in the fine grained minutia of the details. So
Okay.
I think we're still going through it. One reporter had said that if you qualify for it once, then you should continue to qualify for it.
Okay.
So it's not that you need to show an additional decrease in revenue in subsequent months. But
Still to be clarified.
still to be clarified, and there's some fine grained detail in there, and maybe we'll have an update for you on that next time.
I think that's retroactive, isn't it, as well?
Yeah, it's from March 15th.
From March 15th, I think, yeah.
Yeah, so people who have been paying wages should expect to get monies backdated from those periods. So we're kind of in the really lean stretch, guys, where everyone's really short on cash. But for those businesses that are very much affected, then they can hopefully expect a chunk of money to arrive in their accounts within a few weeks.
Sure. I think one thing to clarify here too is that the recommendation from Trudeau was really to hire back if you can. So if you have laid people off, and with the subsidy, you're able to bring them back on to do that. Obviously, we'll have to, from a cash flow perspective, we'll have to get a little bit more clarity on when the portal will be up and running and when the funds will be able to flow and all that sort of business. But the idea is to try to keep people employed as much as possible. Certainly a good strategy for retention purposes. So if that's something that you've had to support people with your clients with, or that you've had to do in your own business, then you might look at potentially bringing those people on if you can, once things are a little bit clearer as far as the timing of cash, I'd say.
Okay. So the next item is the tax remittance subsidies for business. That's the 10%, as people have been calling it. If you're not already taking advantage of that, you can, and that's immediately available just by reducing the amount of payroll tax that you're remitting to the CRA at this point. And that should be available through your payroll software by now. If it isn't, contact us. We'll help you figure that out. The CERB, this is the Emergency Response Benefit. It's applicable to entrepreneurs. So if you've had income in 2019 or the first part of 2020, and now you don't, you can then just apply through My CRA, and money should flow into your bank account within a couple of business days. So if you haven't done that already and you are eligible, very much recommended for struggling entrepreneurs right now. Last thing, and this was the one that caused a bunch of uproar last week, is the Canadian Emergency Business Account. So this is a loan available through most commercial banks for $40,000. It's interest-free for a short period. Some of it's forgivable if it's repaid. 10K of that is forgivable if it's repaid within the year, and then after that it converts into a fairly low interest loan that can be paid back over time. Government guaranteed, so it's nice and friendly for everyone to access. Problem is, a lot of our startups didn't have the 50K of payroll that they're considering for eligibility criteria in 2019, so they're not qualifying for this. So some of us are disputing this, and there's I've got a slide on that. We had a question, CERB, what are the dividends details? Yeah, so if you, the dividends are used to compute how much income you had from your business. So if you paid yourself a salary, if you paid yourself in dividends, you can count that towards the, it's a small amount, $5,000 of income that you had in 2019 or the first part of 2020. And do we have a link for the CEBA application? No, we don't, because there are so many of them. It's recommended that you just go to your bank, and they'll have the links on that. Kern, do you have anything to add?
I actually have a sheet that actually has the links to all the big 5 banks and all the credit unions that has
That's why we
all their.
invited you.
Yeah, so they have. We've got it all done into a COVID bank link, and it goes direct to where the CBA applications can be done. So if depending on, you just have to find the bank that you deal with, go into that link, and then it'll bring you right into the apply screen.
Okay, great. Do you mind sharing that with us, and we can add that to our website?
Yeah, we definitely could do that, and I can
Okay.
send it to you, and you can share it to the website.
Okay, great. One thing to note for them, you do need to have your payroll. You're talking about the CBA, yeah? Your payroll T4 summary line 14 number from last year, and your payroll account number. We've heard that some of the pages will time out after a certain amount of time, so just get those numbers first and then go to the site to complete it. It's very straightforward. You're putting in basically your business name, payroll account number, payroll amount, and then signing your life away to a loan. And I'm not sure if Iain mentioned this, but if you do pay it back before December 31st, 2022, then you only have to pay back 30K of it. So 25% is forgiven at that point. So not a bad little program. Okay, cool. Any other questions on the updates here?
I think we've got a couple more, and then we'll open up the microphones, and then other people can ask questions. There was one about what applies to sole proprietors. I know for sure that the CERB, $2K per month applies to sole proprietors. I think that the wage subsidies do not, and I'm not sure about the CEBA. Kern, do you know if the CEBA applies to sole props?
No, I think you're muted.
Kern, you're on mute.
Can you just go to here?
That I'm not quite sure right now. Definitely have to ask whether it's sole proprietors. I believe it should be only incorporated businesses, but I definitely can ask.
Yeah.
Okay. I think there was talk about it. I'm not sure where it landed, so.
Okay. So more news. These are less exciting, but still there. So you can put off paying your tax for a little bit. Normally, so this is a couple months late. You can file and pay your taxes for both the CRA and the BC PST and health tax. GST and HST payment deferrals are there as well. They're available to you. But actually this one is newer. The Canada Summer Jobs, they're trying to get students working. This is going to be quite useful for some startups who are developing product, and they're having students come out of university programs or maybe co-op, and they want to get those youth working. So this is an existing program, and it's just basically saying that they're gonna pay for it 100%.
And
okay.
To get in touch with the co-ops programs at the various post-secondary education departments is quite simple. If you go to their website, the university websites, they usually have good links for employers to find the co-op sites, and they usually have very good well-organized teams to support you through that process. So we've, for instance, hired a co-op student in the past, and it was a very easy process. So great resources there to help you find the students if you don't have a student already that you're interested in hiring.
Okay, a couple more resources here. So when we send out the slides, you'll be able to click through to these, but wanted to point out a nice link by a friend, Valerie, who she's got a great article on Medium with so many links to things. There's a lot of these resources pages around, but I think she's done a great job about making it reasonably complete. Here's another one from BC EDA. That's a great one. Kern will share his one, and so we'll make sure that gets shared out. These other two links are more activism, so please go to savesmallbusiness.ca/petition. Check it out, what they're trying to do here. And then this last one is a petition that I actually joined. It's on change.org, and they've got just a couple hundred more signatures to go before they can bring that to the next stage. But it's basically trying to remove or change the 50K of payroll in 2019 as an eligibility requirement for the CEBA. This is important for startups who maybe started paying lots of employees late in the year, or maybe didn't pay themselves. The founders didn't pay themselves, and so they're just under that limit, but they're still affected and could really use that 40K before the wage subsidy starts kicking in. So if you go there, hopefully we can get some movement. Myself and a bunch of others did contact the federal government about the wage subsidy requirements being changed, and we did get some traction on that. So it's reasonable to think that we could change the needle on this one too. All right, and yeah, it looks like David pasted that complete link into the chat. So if you're on the chat, you can get it.
All panelists, so you just
okay.
Paste it into everywhere.
Hang on, I'm going to copy paste that link so that it goes to everybody.
There you go. Okay, cool.
Okay, so I think that's the news, and I wonder, Aislinn, if you could just open up the microphones. Are you able to do that so that anyone can jump in and chat? Super good. Okay, I'm seeing microphones come on. So if you want to ask a question, now would be a good time. You can unmute your mic and say hello.
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 Everybody's shy today.
You can type it in too if you prefer.
I have a stutter and I'm stuck.
Okay.
This is David Hewer. Hi, how you doing?
Good. Yourself, David?
Oh.
Did you have a question?
Yeah, he's just got a stutter, so he's a bit stuck. So
okay.
Just be patient.
I was wondering whether there has been movement on startups where the founders are incorporated, and we have good credit, but because we are bootstrapped, we have not been paying ourselves.
Yeah, this is one of many issues that I've seen being raised. It means that you're not eligible for the CEBA. So again, that's a good reason to jump on this petition. Mm-hmm. I think that you could still qualify for the emergency response benefit. Yeah. So I'd encourage you to check that out. The great thing about the emergency response benefit is that they rolled it out very fast to move quickly, and they didn't put a lot of rules on it. They just said, honor system, it's basically, I'm paraphrasing, honor system guys, if you need this and you think you qualify, please apply for it. We'll get it. If it turns out that you didn't qualify, then all we'll do is just ask you to pay it back. So no stiff penalties or fines because they know they wanted to get money out into people's hands right away. So I'd encourage you to check that one out.
Okay, thank you.
And potentially the wage subsidy. So if you do have employees, then that wage subsidy program should be available to you as well.
Okay, thanks.
No worries. Any other questions? Feel free to chat them in the, or add them to the chat as well as we go. We're happy to answer them as we go along here. And we do have a couple of extra panelists here too. So if there's anything specific you'd like to ask them, ask them too.
I forgot to put up my any questions slide. I mean, isn't that guy cute?
That's how I feel right now. That's how I feel right now.
Yeah, I know.
The dog.
Here you go.
We had another question come in about commercial rents. I haven't heard any more news about this. They did mention that they were going to create some credits for landlords so that they could pass on some rent reductions to their tenants. Anyone on the panel, have you heard any more news on that piece? It's been a bit quiet on that topic lately.
Nothing yet. I know that I've been having some active conversations on it because we had to arrange a subsidy with our landlord. But we were very lucky because our landlord, who is amazing, many people know him, is Daryl Hatton from Fundraiser and the fundraiser team there. And they were very nice to allow us to make payment arrangements. And they're sorting out payment arrangements with their landlord. But yeah, it seems like there's nothing really come down the pipe yet. It's sort of everybody just left to their own devices of trying to negotiate. I can suspect that maybe that's the government's sort of last line of defense, because their hope is probably that people will find their own way of negotiating that, because that's a business kind of thing almost. And you know, a lot of businesses, that's probably going to be the first thing I would imagine they would give up, is their space, being that we can't even go to it. So you know, I think it's a question, they're probably also giving a lot of companies, I imagine, giving a lot of companies and people time to figure out whether they need to keep the space or not, and working out their budgets and seeing if, okay, do we really need to hold on to this, or do we let go of that? In our particular case, we have a really great space and we just got it late last year and didn't want to give it up. So we got really lucky that that Daryl was willing to be very flexible and make it that we could stay until this all kind of settles down and we can go back in and start working together again.
For sure. We've heard a lot of landlords just offering a 50% reduction or some kind of reduction without the question being asked. So we're similar. The owner of Sweet Genius, the co-working space that we work out of, just offered that to everyone. And a couple of our clients too, their landlords have just offered them discounts. It's probably an easier way to go than having to ask for a reduction and, you know, or people just deciding to give it up. I think it probably secures the lease a little bit longer for the landlords. And
probably a lot easier than trying to get anything from the government.
Mm-hmm. Yeah, for sure.
That always takes, clearly, as you guys were just talking about it, I mean, it takes time, right? Anything that you're going to get in subsidy or reimbursement is always going to take time. And I don't know that anybody has time to sit around and figure out, well, are we going to get a credit on our rent from the government? I don't know. And it could be
5
3
years
months
from
now. So, yeah. So,
I mean, you look at the 75% subsidy, we've been talking about that for 3 weeks now. And the time from when it was first announced to when the first person's going to get that payment is probably going to be close to 2 months, right? Mm-hmm. That's too slow in this climate right now, as far as I'm concerned. But
yeah, I think what's also happening is another way you could do it is really force the landlord to do something about it. Is that basically says that, you know, we're going to have trouble paying rent, and that forces the landlord to go back to their bank, as similar to what's going on in the residential space where they're offering 6 months deferrals. The commercial side is still doing the same thing for a lot of their commercial clients. It's all on a case-by-case basis.
Yeah.
I think really is, if you are a tenant, you could force your landlord's hand a bit by really just giving them the lay of the land of where things are at. And then it's really up to them to go back to their bank of where their mortgage is held, and then hopefully ask for a deferral at that point in time, because that's exactly what's happening right now to a lot of, maybe not the big guys that, you know, are well financed, but to some of the ones that are maybe smaller landlords that have smaller holdings of properties, that's what they're probably gonna have to do to sort of keep their tenant, because we know at the end of the day, there's going to be a lot of vacancies. And I think landlords are going to try to keep the good customers or good tenants and keep them around if that's the way of keeping them around, is to help them with the rent for now.
Okay.
Cool. All right, let's move forward, because there's some other stuff to get into. So we've got some top tips for financial survival. I've shared this slide before, but I think it's worth saying again. There's no back to normal. It's going to be a new normal. So get into action now. There's only 3 things that you can do to get more cash into your business. 1 is get more sales. 2 is reduce costs or somehow squeeze money out of operations, and the 3rd is get somebody else's money. So borrow or raise. We're going to focus on that last one today. Our top tips to keep in mind while you're thinking of that and preparing for that is to make sure you dig out your 1-page business plan. Maybe go over that. This would be a good time to do that. Definitely talk to everyone. Ask for a lot of help. Make sure that you're working. This is a plug. Make sure you work with your accountant or fractional CFO to get your short-term and long-term financial forecast in order, because it's hard to plan without those numbers. And make sure you pivot and just focus on your team. So there's a lot of stress out there, but the core members of your team will see you through. And so just make sure that they're well taken care of. We do HR chats on Thursdays. So tune in on Thursday at 11 if you want to talk more about how to make sure that your team is whole and complete through this whole struggle. Here are our forecasting tools for that cash flow forecasting piece. We've got some recommendations here. So there's a tool called GRAV that we use with a lot of our clients. There's another one called Spotlight Reporting. Is a little bit more simple, but it's harder to do things. It's harder to have all the fine-grained control that you have in GRAV. So maybe faster to get going on. It's maybe a personal preference thing. Those will get you good monthly numbers for longer term. And if you're looking at day to day or week to week, you want a little bit more fine-grained detail, and you're going to get that from tools like Dry Run, Cashflow Frog, or Helm. All of these tools all integrate with QuickBooks or Xero. If you have any trouble with getting these things set up or doing cash flow forecasting, again, reach out to your friendly neighborhood CFO and we'll help you out. We've also got a free cash flow planning tool. It's a spreadsheet, and we're making it freely available to anybody to use. We've been using it with our clients for years, and it's very simple and great. So happy to share that with everybody.
We just had a really good tip come in from Chuck Grosholds, who's at Optimum Strategies. Thank you very much. Who manages our benefits plan, and he said that a suggestion for cash flow management right now for your employee benefits plans are to suspend dental, which can lower costs by 20 to 40%. So just removing the dental portion for a little while. Obviously, people can't use their dental right now. Chuck, question back to you. You can answer when you're ready. There is, what will that look like when we go to add the dental back on? Are we able to suspend it, or are we taking it off when we go to add it back on later? Will we be paying a higher premium?
Can you hear me?
Yeah.
Can you hear me?
Yeah, I can hear you.
Hi, Chuck.
Okay. Good morning. Some options that the insurance industry is coming up with are to temporarily suspend the premiums on the dental plan.
Perfect.
So, for example, May 1st, you could contact your broker, and they could have the insurance company suspend it completely for up to 120 days. Of course, during that period of time, there would be no claims that would be reimbursed. But as we said, you can't really go to the dentist now anyhow. And if for some reason we're miraculously able to get back to work, then again, the insurance company could automatically reinstate that, in most cases, the first of the month following that.
Okay.
And what insurance companies are also doing, in case anybody out there has a group plan, they're allowing you to defer or stop your premium payments effective May the 1st for up to 60 days. And benefits will be continued to be paid during that period of time. So those are a couple of ideas that we're with our clients.
Oh, yeah, that's great. Is it possible to suspend your benefits but keep your EAP plan going?
EAP often is a separate part of your benefits plan. Okay. So that would be something that you'd want to discuss to see if they can pull that one portion out.
Okay, cool.
Maybe we'll have you on our HR chats on a Thursday coming up, and we can talk some more in detail about these things, Chuck.
Be glad to be a part of that. Thanks.
Okay, that'd be awesome. Thank you. And thanks for those tips. That's probably a good one to reach out to your broker right now.
Okay.
If you don't have one, reach out to Chuck.
It makes me wonder if there's a possibility for something on office insurance.
Possibly.
Oh, right.
Yeah.
As well, because we got lucky because we were just finishing our application just before this all went down, so we didn't end up having to sign the agreement, and the insurer or broker basically said, okay, we're just going to hold off on sending this in since you can't go in anyway. There's no point. They just said the risk is that if something happens at the office and your furniture all goes away or the Keurig sets on fire, there's not going to be anything you can do about it. And we were like, yeah, but it's pretty low risk for us. But I wonder if there's something, obviously, if, there's workplace injury insurance as part of that. Like, well, if nobody's going to the office, I don't know. I don't know. I'm not an insurance agent. I don't know for sure, but I wonder if there's going to be something.
Yeah, it's a good call.
Definitely something to look into. Okay, I wanted to move into the next little segment. So we talked a little bit about reducing costs and planning. But this is maybe where I lean into to Paul's expertise. My understanding of the environment for investors, whether those are VCs or angels or what have you, is that it's definitely a different environment. It's different pitching investors now. That's what I'm hearing. Here were some tips that I was able to gather just by reading things online that would be good ideas to consider for raising equity in a down market. So cutting burn rate, basically having a business that is profitable, that can last through this, is definitely a good move, which is what we talked about, and having all that prepared. Basically get through this and you'll be in a good situation, because then you'll stand out from a lot of companies that didn't survive. So I guess there's opportunity in that, I suppose. And certainly looking and being profitable versus having the growth mindset in high times. If you have a very fast growing business that's not profitable, that could be looked at favorably, because then that growth will turn into future profits. But I think now potentially investors are looking more at businesses that already have some profitability as standing out. And so maybe the shifts that we're making in our business should be focused on that. Paul, do you have any comments or thoughts from any investors that maybe you're talking to, or companies that are shifting the way that they're pitching?
So I'll tag into that. Thanks, Iain. So the reality is in the conversations I'm having with investors so far is, actually, I want to tag in on something you said there, which was, obviously focusing on profitability over growth. I think the reality is, even before this whole situation, the fact of the matter is that that's always going to provide you a better chance, usually, of securing investment, as it were. The interesting thing was that even last year, there was already a lot of talk actually from the investor community about focusing more on companies that were focusing on revenue generation and revenue growth and profitability, rather than the very risky, like, oh, we're going to just go shoot for like 100,000 users on our app and hopefully we can all sort this out at the end of the day. And a lot of that ultimately came out of the original situation of what happened with Uber and a lot of those companies that were, almost show no sign of ever being profitable at any point. And obviously having to have, and WeWork, and showing like major, detriment when it comes to any kind of profitability and bailouts, as it were, from even SoftBank. So a lot of investors were already kind of saying, if you actually go back to September, October, November last year, there was a lot of articles actually coming out from investors. Boris Wertz even was one of them, where they were basically saying like, hey, our mindset's kind of changing. We should probably focus more on the companies that are generating revenue and going for profitability, because that's a safer investment, as it were. So that already was sort of a mindset that was happening kind of over here. And now, obviously, with this situation, that's become even more distinctive and is definitely something that is on the top of investors' minds. One of the things, though, I want to point out is that I teach at 2 colleges, and one of the things that I often say, and my students will usually laugh, because they said that I should start a show called the It Depends Show, because obviously, I'll say, like on today's episode of It Depends, this is one of those situations where it depends, and you kind of alluded to the fact that there's kind of different investors, and for anybody who knows kind of the investor landscape, everything from angel to VC and even high net worth individuals. We have to remember that, with high net worth individuals, for example, they know absolutely how to navigate these times, right? And historically, in any, I know that this COVID situation is kind of a different thing, but if we're talking about the recession that's likely pursuant, the reality is that high net worth individuals know how to navigate that by making investments, smart investments, into things that they know are quote unquote recession proof, or are going to be high growth scenarios in this scenario. And even for the fact of buying low and selling high later, right? Or shorting something against something else. Like they understand the economics of it all, and how to play that economics from one place to another and one region to another. Where you're going to see a lot of difference is you're going to see, there's going to be some snapback probably from angels who maybe were running on angels being obviously that they invest their own money. You're going to see some of them kind of draw back, where, they might not have so much capital to be able to deploy. And they're going to be a lot more risk adverse probably than they normally were before. And if we're to be real, our friend Keith Ipple said it really well in a webinar last week, that if we're to be honest and real with ourselves, the early stage angel investors who normally put that, $50,000 check into a startup that has no revenue yet, the likelihood is it's going to be a long conversation, long drawn out, and you're probably better just to go shoot for trying to generate revenue than having those conversations, to be honest. Sure. And it's very interesting, because one of the things that I've learned in my years of experience, now I'm coming up on this September, will be 20 years as an entrepreneur. So one of the things that I've seen over the years through other recessions is that, revenue generation, it's interesting, because as a startup, honestly, you should always be trying to shoot for revenue generation. And this actually forces us to go back to the basics, and shoot for that revenue generation and try to build up a business, as opposed to just going for the shiny investment that sits over here that a lot of people think that they have to do. This is a good time to remember that entrepreneurs do amazing things when our backs are against the wall, and look for different ways of generating capital and looking for different ways of making money. So, there's the angel stage. Then you're going to have, you have to remember that at VC level, there's going to be 2 different types of VCs. There are going to be VCs that are going to draw back because they don't necessarily know what to do and they're very risk adverse. But then there's a lot of investors that I'm talking to that are going, well, the reality is we already raised our funds. We've got 150 million to deploy. And, I have one investor friend that raised $120 million round for his fund late last year, just closed it off. He's like, I got to deploy those funds. It says in my articles that I have to deploy those funds for this fund by a certain date. And he said, the only thing that's changed is that I'm just going to be a lot more risk adverse at the companies. I'm going to be doing some extra due diligence, and I'm going to be looking for maybe slightly changing my view on opportunities. So maybe looking for opportunities if I was less into health tech before, maybe I'm going to skew a little bit more towards health tech right now. Or maybe even clean tech, right? If I was less of an impact investor before, maybe I'm going to go a little bit more towards impact. And that was kind of the conversation I had with him. And I think that's likely the reality. The reality, though, is that these conversations are going to probably be longer. So do be aware that you might be in for a longer due diligence period, because they're going to want to make sure that you've got, and this slide that you've got up right now is perfect to say exactly that. They're going to want to check, how have you, recession proofed your business? Have you cut your burn rate wherever possible, although not harming the business, as it were? What are I think the unit economics, there's probably nothing more important right now in terms of unit economics, all of that kind of stuff. So that due diligence is probably going to be a lot tighter. There may not be so much frivolity in terms of like, well, before, last year and the year before, there was a lot of situations, even in Canada, where we're getting Americanized investments, where people are like, well, you're not quite there, but we'll let it slide, right? We'll take the risk. We'll put in the 13 million and it'll be okay. I think you're not going to get so much of that right now for the next probably year to 18 months. It's going to be really like, okay, no, it's got to be by the book. We're doing a tight due diligence on this. And the unit economics have to make sense. You've cut your burn rate. You've got a proper plan in place. And you really know at least what the next 3 years looks like at minimum. And can really express that. So on our side, somebody who's really good at that is Chris Stairs. I don't know if you guys know Chris Stairs, but he's our financial advisor on our team, and works with entrepreneurs on their financials, projections, and what we call cocktail napkin economics. That cocktail napkin economics is going to be so important in these conversations right now. Because investors are going to want to know with confidence that you're going to be able to be like, yeah, I know every number off the top of my head that fits in a cocktail napkin, what my lifetime value is, how I'm going to convert, all that kind of stuff. So funnel, unit economics, burn rate, churn rate, like all that stuff is going to be so important to know right now. If you are planning to raise. If you don't have to raise at this time, don't. That'd be my other recommendation.
Yeah, that's
what you can.
So good takeaways there. What some highlights that I picked up is, if you don't have to raise, don't. Definitely like that one. Also, it seems like look in different places for money. So if you are going to raise, don't necessarily look at, a common strategy is to look at the kinds of things that an investor invested in previously, and use that to inform might they be interested, because that's sort of out the window. Also, maybe looking at, have they just raised their fund because they have funds to deploy. So that could be a good trigger for a conversation or people that you want to target. And then when you are pitching, then really focusing on the fundamentals in the long term, the three-year plan, profitability, the fund.
And one thing I can actually mention as well is I've just had in the last 2 weeks, I've had now probably, I think a total of 7 conversations with different accelerator incubators, and all of them are still business as usual, because they've got funds to deploy, and they're still saying, hey, it's okay, come on over to us. Like one out of Toronto, New York, San Francisco, Accelerprise, I just had a conversation with them last week, and they're like, we're still business as usual. We're looking for companies, and in fact, we're now looking all over North America and not just in our own backyards. And that brings me to a really quick point, is that the interesting thing that I'm starting to hear is there's some talk and conversations about investors actually opening up and going, oh, wait, hold on a second. Now that we're in a virtual world, maybe there's an opportunity to open up and start maybe looking at investments in different places. And a couple of the accelerators I talked to were like, actually, since we're virtual now, we'll start accepting applications from other places that we didn't normally. So I think there might be actually an opportunity in that sense, where you can start even looking global or international for other investment opportunities as well, as long as their articles will allow for it on their side. But you know, and a savvy investor is a savvy investor, and if they like your business, they're going to find a way to invest. And honestly, what I found over the years is that if an investor really wants to invest, if you have the right lawyer, I won't say one because I don't know who yours is, but I know that ours, when we've gotten an international investor with my previous business before, it was a one-page form that they just had to fill out. So it's a lot easier than a lot of people think.
Yeah.
Yeah.
I want to leave room for Kern to put in some comments. I know some people are not considering raising equity, but maybe they're going to go and try to find some debt. These are some ideas for people to look at. I'm just going to skip through it, and you'll have access to it on the slide. They're just some other people to look at. Oh, someone's on mic. Okay, the next thing is on pitching bankers. So whereas I felt the sentiment was that with investors it's all different now, I felt that from what I'm hearing with bankers it's the same now. So maybe you know, we've put these up before. So here's, you know, BDC. Here's some of the funds that they've got available. The CEBA we talked about. EDC has some funds. There's a whole load of them, and we'll share the links to these as well. But I'm wondering if we can get Kern, your comments on where should you go in this kind of market to get a loan? What should you be thinking about?
Yeah, like right now, really the best bet is to go to your existing bank. You know, in our business prior to COVID, we had a lot of term sheets are out there where customers are always looking to find another bank for better pricing, better terms and conditions. Many of those term sheets have all been stalled now, so banks are not looking for new business. If they are, which is what Paul said, is they're going to look at it with more of a COVID optical lens on it. Basically, all the banks have come down through their credit departments with, you know, we've got it summarized, but there's probably about 10 to 15 COVID type questions that every lender who's adjudicating a credit right now needs to answer before they get any money approved. So a customer going to a different bank, that is probably one of the hardest things to do right now, unless you're recession proof, you have a compelling reason why they'd want to book you right now. So the best bet right now is to go to your existing bank, and that's what most of the commercial lenders are doing right now is helping existing customers, whether it's a working capital loan. Many of them are doing a 25% bulge on their existing working capital loans, is what I'm hearing. On the term piece, which is maybe you have a mortgage on your property, they're offering what they're offering in the residential side, which is the 6-month deferral plan with no interest and principal payments up to. So that is exactly what all the big 5 banks are doing. If you're looking for additional money and don't feel that your own bank is coming to the table to help you out, which you guys have outlined there on the second point, BDC is really the only other option out there from a bank perspective that is backed by the government. They have a BCAP program that is up to $2 million, which you have to show a definitive 6-month cash flow that you are going to be at a net loss in cash. And they will fund you on that with up to 1 year of interest only, or even no payments for up to 6 months. So BDC is really the best bet right now, along with EDC. If you do have a business that does exporting outside the country. Saying all that, BDC, we have a few applications out there, and their volumes are extremely high right now. We're looking at least 4 to 8 weeks for an approval. BDC typically had this an online loan application that they put out there where you can borrow up to $100,000. Typically, they get 6,000 applications annually. About 2 weeks ago, they said that they got 6,000 applications in a week. So they typically had only 20 people in that department that adjudicates those online applications, and now they've since bumped that up to 200 people. So there are definitely a huge rush for money by the entrepreneurs, but it is there. It's just that, you know, the problem right now is, does your business have 4 to 8 weeks to wait for that 100,000. So that's a bit of the struggle. And the commercial banks are also working as hard as they can on their loan, but right now it's just on volume versus people. And for us, luckily we know some people in BDC, and they've basically been able to tell us is as long as you can bring a complete package, they are able to sort of put your application up higher than others that are incomplete. So really right now is they're looking for full complete packages. And I could share, through you, Iain Rogers, of what those things are that they want as part of the package, because they aren't looking at packages that are incomplete. They just feel that that's just more of a time waster. They definitely need to be efficient in trying to help as many clients as possible with the amount of people that they have that can help out.
And just for highlights, so that's going to be things like, past several years of accountant prepared financial statements. It's going to be, some projections forward, how you're going to repay the loan, what you paid for, how you've been affected by COVID, all that kind of stuff.
Exactly. And we have a questionnaire that we've created with all the and I can definitely spit it out to you guys after this call, and you guys can post it out. But yeah, 3 months, years, account prepared financials, recent interim, projections, cash flow, org chart, and definitely a statement of personal affairs of each shareholder. So that is more than 25% of the business. So, as long as you can bring in a full package, you may get a quicker response time. But right now they're looking at anywhere from a 4 to 8 week turnaround.
Okay, sounds good.
And if I can tag into that for just a second, and I don't want to take away from Kern, but we're partners with BDC across Canada as well. And like in our conversations with them recently, we're lucky we got our sponsorship and partnership from them just before this. But they basically told us like, hey, the reality is that we're spending most of our time with our current clients, and that's going to be our focus probably for the next 4 to 6 weeks, is going back to all of our clients. Like our friend Nicola from BDC, Nicola Matthias, I had a call with her a couple of weeks ago, and she said, honestly, my job now is I have to reach out to every one of my portfolio clients and see if they're okay, and work with them to make sure that they have the funding. So I'm not even looking at new applications right now unless it's forced over to me from head office. So I think that's going to be the reality. Again, that brings me to, and I think Kern would probably agree, that brings me to like, if this is a situation where if you can find a way to raise the money through revenue and do it that way, maybe do a front-loaded contract even in some way. That's another conversation for another day, but yeah, there's some, that's a sales trick that you might want to start bringing in. So I can do a plug on that later, maybe.
Yeah. And Colin, you put your hand up a couple of times. Did you have a couple of points too?
I did. I know you only have a minute or two left here, but definitely doubling down on what Paul and Kern are saying there. I know when I put on my other hat as an entrepreneur and what we're developing and have a prototype in that sport innovation space, and our customers like Cineplex or the PGA Tour are reliant on gathering people together, which isn't going to happen for at least a year now. So once again, we're not raising money. We're now bootstrapping and doubling down on just building that product and keeping those relationships with prospects together. So we can't really pivot on that, but we can move other parts of the business forward to get to revenue and keep those relationships going and understand their needs. So I recommend to all entrepreneurs out there is to do just that. Just talk to those potential prospects, understand this changing landscape as quickly as you can. And quickly here also, if I can, I know you guys talked about this a little bit, but I would recommend that that perhaps on the show here that you reach out to someone with NACO Canada, so the National Angel Capital Organization here. I know that with Peter and Irene Dorsman with Angel Forum Vancouver, they're wonderful people. I'm sure they can add some value here on a future one. The same with and Paul, you're good friends with them also with Luke and Grant over at Valhalla. I'm sure they can jump on and add some value too. The last thing I really want to quickly add here is I'm in constant contact with NRC IRAP because I have an advisor for what we're doing, and it's interesting how they're pivoting. So great opportunities for any entrepreneurs out there in the health tech, med tech sector right now. And I'll copy and paste this at the end here, but they have an Innovation Solutions Canada program, the ISC. And long story short is they now have all kinds of challenges that are going on, especially if you can pivot your business a little bit to align with the response to COVID-19. And they've got medical categories. They've got 3 different themes and 2 non-medical categories here too. I don't have time to read them all here, but there's details on that. I'm going to quickly go into our chat here, and I'm going to paste that for everybody so they can see that.
Thank you.
And
we
yeah, so they're pivoting also, even with IRAP. So as far as what we are been in conversation with for the last year with them to get funds, we don't qualify right now. So they've completely changed their model also. So there, I just pasted all that in there for you folks there. And I'm going to be putting that with Startup Vancouver also later today or tomorrow, just as far as that information too. And anything that you provide me here that's come out of this, both Kern, Paul, and with EntreFlow, happy to promote and send that information out there through our Startup Vancouver social media channels.
Thank you very much. So we're at time. I think this is perhaps the first time that we've gone over time and not made it through all our slides. There's a lot of great content here, a lot of great topics and discussion to chat about. And I have a feeling that we'll continue this on next week's Finance Quaranteam Chat. Because there's more to talk about, and I'm sure that you all will have more questions as you go through these processes yourselves. In the meantime, you're free to reach out to us. Our email addresses and phone numbers are up there. All this information will be posted on our website and shared out across our social media channels as soon as we can. If you have things that you want to ask or want to have discussed on an upcoming chat, then please just let us know, and we'll try and make sure that we include that stuff in there. And in closing, we had one comment from someone on the line here that the motto for moving forward with pitch and new projects in our area is do more with less. And I think that's a great way to close, because I think that's unquestionably true. So that's all, and thank you for joining us today, and hopefully we will see you on the next time.
And thanks again very much to our panelists who joined us today. Reach out to them as well if you have any questions or want to connect with them.
Great.
Have a lovely day, everyone.
Thanks so much. Bye now.
Bye.
Thank you.